Newmarket freeholds. Again, Matt, this is where your buyer found a nice opportunity last month and where there is more opportunity out there. And funny enough, look at this. They did see some month over month change in terms of the pricing. I think what this says to me is buyers are starting to see the value there, right? So we had some sales kick in, surprisingly down month over month, but maybe just the better homes were selling. As less sold, we start to see the better properties start to go. So we see about that 6% bit of growth in median price. Transaction volume down 17%. Terminations up 10. It's getting close. They're still adjusting, but look at this one. Year over year change in terms of that termination volume in Newmarket freehold housing. 95%. In terms of that, which is quite crazy. When we're looking at the year over year decline in price, 9.4%. So anybody that was buying this month got it at a 9.4% discount in comparison to last year. When we're looking at that median price.
We've had 2 years that have more active listings than what we're seeing right now, but their sellers do seem to be aggressively pricing their properties a little bit better in Newmarket than some other areas.
Yeah, so there's the graph of active listings like Matt's talking about. Let's come back to new listings. Again, here's that traditional rollover from May to June. We're still right in the middle of the pack. The new listings are not the issue that we're seeing in a lot of markets. It's that sales volume is so low. So as these new ones are entering, active listings are starting to stack up because when we come into our sales volume, we're just not removing listings from the market as much. And so here we are, still the lowest sales volume across in 15 years for a freehold in Newmarket. That's lower than 2020 when we had only been locked down in the beginning of March. So we were 3 months into a pandemic for the first time ever, told not to leave our homes, and we were selling more houses.
Mm-hmm.
Median price, here's this little bit of an uptick, which is kind of interesting to see.
It is. It's a lot better than what we're seeing in a lot of other areas in terms of ticking up. And I mean, at the end of the day, we did see a 6% uptick in the average price. Now, maybe just because of how low sales are, that it's skewing the price a little bit to the higher side. But I think that the prices in Newmarket are starting to be quite attractive for the freehold. Don't forget, a lot of homes in Newmarket have some decent lots on them, and it's a great place to raise a family. And, it is kind of the furthest away, if you think about it, Richmond Hill, Aurora, Newmarket, the next step's Georgina, which might be a little too far for people, or Barrie.
Bradford, same thing. Bradford to me is just tucked away just a little bit.
Yeah.
Or it's just that little bit further. So yeah, the value is there in Newmarket.
Yeah.
And it's interesting to see. So obviously we're coming really close to the time where we're starting to see when the change would have first happened, right? In 2022.
Yeah.
So as we get here to the 2021 numbers, will this drop under it by the end of the year? Probably, because we saw a massive uptick at the end of 2021 into the start of 2022. But after that, we're looking at 2023. So while we're below all these lines right now, Newmarket is the first spot where we're starting to see, hey, after next year, we're probably going to start to be above a bunch of those years again. What do you think about that, Matt? Do you see that potential here to maybe cross over? Because again, even if we just went straight across, by the end of next year, we would be above 2023.
Yeah, I think unless we get this uptick in sales near the end of the year, like we saw after the pandemic, let's just say Trump comes out tomorrow and says there's no tariffs in Canada, and the Liberals come out and say they're going to spend all this money, and it drives the market up. I think if we're in the same scenario by the end of the year as what we're in kind of now, then we're going to be potentially looking at pretty close to all three of those lines at the end of the year.
Yeah.
Because let's face it, you're going to get your best prices in the first 6 months of the year, typically.
Yeah.
So it's going to wane off unless there's a catalyst to drive prices to the higher side.
Yeah. Because by next month, depending if we level off, maybe we'll be the same as 2022. But by August, hopefully we should be above the 2022 pricing.
Yeah. So honestly, there's definitely a possibility for it. There just needs to be a catalyst to get people back out.
Yeah. Months of inventory, still up there, but lower than the last two areas that we looked at. 5.25 months worth of inventory in terms of what's available out there for buyers. Still well above the other stuff that we've seen. Our 2017, 2018, 2019 numbers still hovering, above that 4%, maybe 4.5%. We want to drop down to start to see the improvement.